Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a rolling earthquake of economic destruction. American employment levels fell sharply in March. The official non-farm payrolls report showed a payroll employment fell by 701,000 in March, and the unemployment rate rose to 4.4%. But these are seasonally adjusted results. The actual employed workforce fell to 155.2 million in March from 158 million in February. And that is a fall of 2.8 million people, probably a far better indication of what actually happened. But this is the situation in mid-March. The survey behind these numbers predated many coronavirus-related business and school closures in the second half of the month. The weekly jobless claims report is a more up-to-date indicator of the shock that's taking place, and more than 10 million people have filed for these benefits in March after losing their jobs. As the crisis deepens in the US, the threat of bank runs rises. That's despite the deposit insurance program. Now, Fed researchers are wondering if holding back information and data that was once transparent would help control such urges. They conclude it will. A policy of suppressing information about banks' balance sheets has a significant and positive effect on deposits, they say. Officials seem determined that there will be no austerity response for this crisis. But despite the cash splash, the impacts at the household and firm levels don't look any better. The US economy is now expected to shrink 5.5% in 2020. And China has sharply cut the amount of cash mid-size and small banks must hold in reserves, releasing about $100 billion in long-term funding to shore up their economy. They also cut their reserve requirement ratio for these banks by 100 basis points in 2 phases, but are still holding off cutting retail deposit rates minimums despite bank pressures to do so. Their private Caixin Market Services PMI hasn't shown the same recovery that their factory one did. The Caixin survey shows a still fierce contraction in March, unlike the official services PMI, which claimed an expansion. The Caixin survey is probably more realistic. And the Aussie services PMI doesn't look for comfortable reading either, and their economy is now expected to contract 4% in 2020. And the huge Australian superannuation fund sector is in a liquidity crisis, and withdrawals now exceeding inflows, as a sector that is about to be shaken up hard. US Treasury 10-year yield is holding at 0.6%, and gold is firmer today, up another $4 to $1,622 an ounce. And US oil prices are sharply higher today than where we left it on Friday, at just over $28 a barrel, a $3.50 rise. The Brent benchmark is also higher at $33.50 a barrel. And the Kiwi dollar has been stable over the weekend at 58.7 US cents after last week's cumulative loss of about 2 cents. On the cross rates, we're at 97.8 Australian cents, and against the euro, we're at 54.3 euro cents. That means our trade-weighted index is at 65.7 and about 100 basis points lower for the week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.